Hello and welcome everyone to another weekly market commentary from StashAway. Of course, as always, with us, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hi there, Philip. How are you doing?
I'm doing well. Hope you do the same.
We should catch lunch sometimes and at the office.
Yes, and then we can maybe we'll be able to record in the office that day. Yes, we'll definitely have to do that. Lots of things, of course, happening again. And, news obviously from an election perspective are coming up more and more often. One of the big topics of the election, right, has been how the U.S. and China are handling each other, right? And it's as we said before, a lot of tit for tat, when it came to sanctions. Then Trump, obviously, I think his official deadline is the 15th or something of September for the TikTok sale. Otherwise, it will get banned from the app stores. There's a big twist happening now, right? Because the Chinese came in and enacted some kind of export law, which will make it very hard for anyone buying them or even interesting to buy them. Can you give us a little bit of an overview what's happening there?
Well, in the latest twists, like TikTok do not already have a headache, right? Negotiating with the US government and being so many people bidding for it, it's a complex task. Whether it's 45 days or 455 days, it is a crazy task, right? Now the Chinese government came in. They instituted an export law that bans the export of sensitive technologies such as artificial intelligence interface, things that uses artificial intelligence to process information, and is defined very broadly to the point that TikTok is likely to be covered, right? Like even analytics that looks at user preferences, how to recommend topics to users, right? Those would definitely fall under it.
And that's the more valuable thing, right? This is what all these companies were aiming for because it's so unique in this recommendation engine, right?
Which means the ban would subject anybody who's buying TikTok in the US to just buying the shell and not the machinery. That's exactly that you say.
Yes. And who would want that, right? So, yes. Yeah, it might be very interesting on what's happening on that front. But again, hey, the Chinese just showing that they also have a card to play here, right?
So this makes both governments involved. It gets ever more complicated. And for TikTok's perspective, from a game theory perspective, the best thing to do is to stall, right? And TikTok's already suing the White House for an unconstitutional ban. And that should delay the ban because if you're in a lawsuit, I'm not sure whether the ban is going to proceed as timed. This is remain unclear at the moment. And also the best strategy is to wait for the January election to finish in the US in November.
Well, I think that's a great what's it called? It's a great leap over to the next topic actually that I wanted to talk about, right? And that's actually the election and the polls, right? You just mentioned that maybe this is a great way to buy some time until the general election is over and see, hey, is it going to be a Joe Biden presidency or is it going to be a continuation of Trump? And even then, what does a Trump continuation mean, right? Will he back down a little bit because it's his last term? What does he want to stand for at the end of 8 years? But I think JP Morgan issued a notice to their clients this week as well in a research note that that Trump is rising in the polls and there's a very high likelihood or chance that he's actually going to be winning. What do you make of that, and where do you see that he has been? Where and why are you seeing him picking up points to Joe Biden, who had like a 10-15 point lead apparently?
Well, let's start small, right? For one, statistically, there's always a bias, especially during early on, and when you have the COVID lockdown situation, right? And that sort of might have skewed the results against Trump in this case. And two, Trump's strategy has recently caught up. It's about law and order, but it's not really about peace. It's more about protest and looking tough, having a sort of law and order image for America, right? So that would probably swing people to say, well, I feel safe voting for someone who is firm, right, and protecting my interests amid all the chaos we've seen recently. So that's why we've seen Trump's rhetoric's always been more insightful than seeking peace, right? So in a way, that's sort of my personal interpretation. Call it what you may. So in a way, Trump's strategy is narrowing the lead of Biden and statistically, those polls can swing by another 5 to 10 percentage point, which means there's a good chance that Trump may actually still have still be able to win it. So you never know until the last moment, just like Hillary Clinton.
No, I think it's a big toss-up at this point, right? So I think not even looking at the polls, it feels like this country is so split in half, right? That it's going to be coming down to every vote that there is. And, some of the outcomes they're already talking about is that, Trump might win on the night off, but once all the actual mail-in votes are counted, he might still lose, like a week or two later, which will make up for a very, very interesting transition period, because I do not think that will be going on without.
Well, he did lose the last time to Hillary Clinton in terms of popularity, but he won it by the electoral college, which means that you can have a lot of people in the state, but if the state has one vote, it's one vote, right?
Yeah.
Among states, so that math could still be in his favor. You never know. Yeah.
No, absolutely. Yeah, we'll see. Hey, we're getting closer.
Well, whatever we say here,
exactly.
The futures options market is not complacent. Just to point out that the VIX futures for October expiry, which covers a month from October to November, and the one after that, they are still pricing elevated volatility for markets at around 33.5 percentage point in the VIX level. So that's quite a lot of volatility compared to normal times.
Yeah.
And then probably three times as large.
Yeah. Yeah. No, it's good for people to keep in mind when they're looking over the next 2-3 months. Another topic, obviously, that was that was said and discussed after we recorded last week's episode was obviously the Fed meeting and the notes and the speech by Jerome Powell. Do you want to really quickly, before we go into the user questions, give an update on what was said and why was it so significant in terms of what he said?
Well, for the first time, central banking policy has not moved to thinking about inflation in a spot basis, but thinking about it as an average. So meaning maybe today, let's say in the future, a few years from now, things are getting better, prices are rising. The Fed may see inflation way above 2% target because they're looking at an average over a certain window. So that means that you need inflation to be above 2% quite a bit and for long enough to bring the average up to 2, and because that's your target now, not spot, but on the average. So that means it's going to be the Fed is committing more towards reflating the economies and supporting the markets. And 2, the Fed may, if they have to, they may introduce something called a yield cap, meaning if things are doing well and prices are rising inflation-wise, the Fed may actually let inflation run. But because of inflation running away, interest rate sensitive products, bonds, fixed income, governments issued securities, the yields on those things would rise. The Fed may actually do a yield cap where they come in aggressively to buy and make sure that you never get above a certain level. So it's too far to speculate that, but that's what can be possible with this sort of strategy that the Fed has moved to. So this is a regime change.
Yes, and a big one, right? So this is it's a big news. Thanks, Freddy, for all these updates. Very insightful. Let's move on to some of the users' questions that we've gotten over the last week. Again, for everyone listening for the first time, please feel free to put any of your questions in the comment section below the video so that we can pick them up over the next couple of videos. So let's start with the first one, Freddy. It's from Ritz M. He says, you mentioned decision forests which means last week's video, right? Are you also investigating how to use, or are you already using AI, machine learning, to further enhance the economic regime asset allocation model you use at StashAway?
Well, AI and machine learning, they're quite different. But let's say machine learning is a subset of artificial intelligence. artificial intelligence has a higher bar in the sense that the machine must be self-aware. You must have intuition. So let's call it machine learning for that. And today's machine learning techniques are not exactly to the point of being fully safe on autopilot for navigating markets, but it's nonetheless a good thing to have some sort of intelligence around your investment framework. And the StashAway approach is not exactly autonomous machine learning, but what we do is we have a lot of rules, if-then logic, that so that's why I call it a forest of decision logic, because there's a lot of if-then scenarios and conditions that's been tried and tested from data and looking at stresses, looking at past different economic environment. There's a lot of different situations that's been budgeted by those if-then statements, right? So that itself is more like a disciplined, a more guided sort of intelligence approach. And so I wouldn't say we are actually deploying machine learning, but we're deploying a large number of decision logics. So I think I would separate it from there. And as to the decision on whether we should use machine learning or not, that's an ongoing debate, because when they innovate past a certain point where they can do the job better, why not? But at today's level, machine learning actually do not add a lot of value unless you're dealing with billions of parameters. So in driverless cars, self-driving cars, that's a very good example where you need a very sophisticated AI software, but not machine learning. You need a more advanced version of that to make it safe. I think investing is more dangerous than self-driving car, by the way. There's just a lot more uncertainties. So it still pays to have an investment committee like we do. It still pays to have a lot of decision logic that's based on past data, past scenarios, right? So again, only time will tell where we progress one day. It's an ongoing effort.
Yes, absolutely. And the last question before we wrap it up, Freddy, is with more and more companies reporting on their Q2 2020 earnings, which the person calls the global lockdown quarter, right? What is your model forecasting for the rest of the year, or basically how, what do you suggest those numbers will tell?
I think during the COVID-19 route, we made it quite clear that the market is going to disconnect from the real economies, and earnings is part of that on the real economy side. And the reason is the monetary stimulus is going to just force it apart, and it has happened, right? So for us, we knew that earnings and guidance on earnings is not going to be reliable, because even the companies, the CEOs of companies themselves, back then, even it's less uncertain today, but we know that back then they were all like, God knows where future outlook is going to be. And today the uncertainties were significantly less. Things are rebounding, but you still see a large number of CEOs when they were surveyed. They still say that it's very difficult to predict where things are. So I think the earnings guidance is going to be more volatile, more subject to revision. So as a factor to explain things, is actually losing its explanatory power. And that's why we need to continue to focus on the elephant in the room, which is velocity of money, and that drives how much the central bank is pumping. That remains a very, very, very key driver of asset returns for years to come.
Yes, absolutely. And for anyone listening, we discussed the velocity of money multiplier and stuff like this in the previous 2 or 3 videos. So if you want to go back to those and have a listen, please feel free to do so. We also have a couple webinars coming up over the next week. In Singapore, we have the topic of investing for women. That's going to be on the 8th of September. That's, I believe, next week, Tuesday, from 6:30 till 8 p.m. So if you want to sign up for this, there's the link in the show notes below. And for our Malaysia audience, we have a course on personal finance. That's on Wednesday next week, 6 to 7. Again, link to sign up is in the show notes below. As always, I wish everyone a wonderful rest of your week. We'd like to interact with you, so leave your questions in the comments. And Freddy and myself will be back with you again next week. Have a great day. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.